Traders, welcome to this week's weekly market predictions. We have a short week in the market this week because of the Thanksgiving holiday here in the US. But nonetheless, let's go ahead and get prepared by taking a look at some of the major levels of structure on the top 5 major pairs and discussing how we're going to trade each of these pairs throughout this short week. So following the intro and disclaimer, I'll be talking to you about some of the trade setups that we're going to be taking a look at throughout the rest of this week based around major levels of structure. And if that sounds interesting to you, then go ahead and click that like button to help support the channel. Also, if you want to make sure you're alerted each Monday whenever we come out with these weekly market prediction videos, then click that subscribe button and also click the little notification bell right beside it. I'm going to go ahead and let the intro and disclaimer roll, and I'll be right back to talk to you guys about our trading predictions for this week. As for the immediate future on the dollar yen, we're going to be looking for some kind of shorting opportunity and some type of shorting entry reason in order to capture some trend continuation and ride this market all the way down to the 111.79 area. Let's zoom back out to the... What you just saw was a clip from last Monday's weekly market predictions on the dollar yen, and we're back on that dollar yen pair now. Last Monday we predicted this market would continue in the downward direction, and I'll zoom back out to a daily chart to kind of go over that analysis once more with you guys. But as you can see, this market ended up doing exactly what we predicted. We came off this daily level of structure and started making new lower lows and lower highs, putting us into a possible reversal because the market previously was in an uptrend. And then we pulled back some and got a little entry reason out of this pair, and we've since then taken off first targets and continue to hold this position, waiting on a test of our next support level at around 111.79. Now we got pretty close to that support level, but unfortunately we were not paying attention to the chart at this point in time, so we weren't able to take off that position. Now the market's rallied up some, but we're still expecting this market to make another lower high and lower low down here towards at least this support level. So let's zoom out to the daily chart and take a look at why we expected this to be a possible reversal. Here we are on that dollar yen daily chart, guys, and as you can see, we had a level of structure right here that had been tested multiple times as resistance and support back in the past. So that meant that this level of structure was an important level of structure we were going to be paying attention to. When the market got up to this level, we put in a lot of selling pressure with these candle wicks showing us that this was a possible place the market would find resistance. So now we have two separate conditions. We have a level of structure that was tested and respected multiple times in the past, along with selling pressure at that level based on candlestick analysis. After that, we waited on another condition. So as you can see, we're not just waiting on the market to get to these structure levels, we're waiting on the market to get to these structure levels, and then we're applying different conditions to help make our predictive analysis more accurate. So after getting here, putting in selling pressure, then we looked down on a smaller time frame and saw that this market was creating lower lows and lower highs, and that indicated that this was a reversal zone. So once we have all of those indications that the market might head lower, that's when we started looking for an entry reason and ended up getting one around the 113.47 area. Directly after that, the market pushed down pretty dramatically over the next couple of days, easily hitting our first target and now continuing with this position, hoping we can get some more trend continuation and head a little lower here on the dollar yen. And that's how our analysis played out from last Monday's weekly market predictions here on this pair. Now let's go ahead and discuss a little bit about what we're expecting next out of the dollar yen. So next up for the dollar yen, we're looking to see if we can get some kind of push down even further towards the 111.79 area, which is a level that's been respected multiple times in the past. So this is going to be our next major level of support. If we get to this area, we'll be looking for a reason to possibly take a counter trend trade towards the upwards direction on a smaller time frame. Now if we push below that, we'll be looking for reasons to short this market all the way down to the 110.47 area. If we get there, we'll be looking for yet again another counter trend opportunity down on a smaller time frame to go long. That's it for support on the dollar yen. Now for resistance, if this market pushes up from this level or we push a little lower and push up from our support level, our next possible resistance level is going to be right around here at the 113 even handle. We have this level of resistance that has been respected in the past, and if we get above that, we'll be looking at the 114.23 area for a possible shorting opportunity, and above that at the 114.95, around the 115 even handle for our next possible resistance level. So that's our predictive analysis here on the dollar yen. Now we'll go ahead and move on to our next pair, which is going to be the euro dollar. Last week on the euro dollar, we talked about this level right here around the 1.1686 level as being a level of resistance we were paying attention to for a trading opportunity. The market got to that level but then pushed straight up with this big green candle, never giving us an opportunity to get involved in a short trade from that zone. But then we made it up to our next level that we discussed in last week's video, around the 1.1862 zone. The market put in a nice candle wick showing selling pressure right at that zone, and since then has pushed down over 120 pips from that area. And if you'd like to learn more about how we make predictive analysis like this each and every week, then you can click the link in the description labeled EAP Training Program. There's a special discount on that program just for you guys. So click that link if you're interested in learning more about our analysis. Now, as for the euro dollar, and as for this week, we're going to be changing this 1.1686 level here into support since the market has now broken above it. So instead of red, we're going to change this line to blue, and we'll be looking at this level for a possible level of support. If the market makes it down to this level, we'll be looking to take a long opportunity from this zone, and if we push below that, then we'll be looking at the 1.1453 area as our next level of support and next level to take a possible long trade from. Other than that, if the market pushes back up yet again towards the 1.1862 zone, then that's where we'll be looking for our next shorting opportunity out of this market, and above that around the 1.2060 level, these previous highs looking left. So that is our predictive analysis here on the euro dollar, and that's what we'll be paying attention to for the rest of the week when it comes to trading opportunities on this pair. Let's go ahead and move on to our next pair, which is going to be the Aussie dollar. Level as support, but the more likely scenario is that the market actually breaks through this level because of how many times it's been tested and the market was unable to put any kind of real rally up to break above our previous support levels or even to our next resistance level. So because of that, we're expecting this market to continue in this downward direction, and we're just waiting for more confirmation on this next candle here on the Aussie dollar. Now, if we get that confirmation, let's say this candle. So last Monday on the Aussie dollar, our prediction was that this market would continue lower, and that's exactly what we have seen out of this market. As you can see, this market has now broken below not only that support level we were discussing last week, but also the next support level we had, pushing all the way down to our 0.7534 level. Now at this level, if we go to a lower time frame and see some kind of entry reason, we will be taking advantage of that as a counter trend trade. And next up, we actually have to point out another level of support. So let's zoom the chart out and take a look at the next level that's been tested and respected multiple times by this pair that we can use as support. So the next level that I see is right here. This is a level the Aussie dollar has used as support multiple times. And if we make it down to this level, it's a level we'll be looking at as support once more. That level is around the 0.7459 zone. So those are our levels of support here on the Aussie dollar. And next up, we're going to be taking a look at the levels of resistance. These two lines above price action now need to be changed to red because they are now resistance levels since the market has closed below them. So on smaller time frames, we'll be looking for a rally out of this market to get up to the 0.7584 zone. That's where we'll be looking for some kind of shorting opportunity out of this pair. Above that, we'll be looking around the 0.7627 area. That's where we saw some of this consolidation here in the past, along with other levels of support and resistance that have been respected looking left. That's a level we'll also be looking for some trend continuation shorting opportunities from, and if we do push above those two levels that are pretty close together, we'll be looking around the 0.7735 zone as our next level of resistance here for the Aussie dollar. And that's going to do it for this pair. That is our predictions on the Aussie dollar. Next up, we're going to be taking a look at the pound dollar and discussing the levels of structure we're paying attention to on that pair throughout the rest of this week. Here on the pound dollar, we've been in this period of consolidation between the 1.3305 zone and the 1.3056 zone for the last couple of months. So really nothing has changed on this pair. What we're looking for out of this pair is some type of reason to go short in between the 1.3305 and the 1.3246 zone. We'll be looking for short entry reasons here, as this is the most previous level of resistance on this pair. We'll be looking for long trades if this pair pushes down to the support level of this period of consolidation around the 1.3056 zone. That'll be our first level of support. If we break through that, we'll be looking around the 1.2850 level for our next level of support out of this pair. Now, anywhere in between these two areas, right in here, we're not looking for any type of trade because this is a period of consolidation, and when the market starts to do this, it can really whipsaw around in between these two areas a lot. So we will not be paying attention in between these areas for any type of trade. Instead, we'll be waiting on this market to either break below, like we just discussed, or if we break above this resistance level, we may look for some long opportunities up to the 1.344 area. That'll be our first level of resistance if we break out of this period of consolidation. and above that around the 1.359 area will be the second level of resistance, looking left at these highest highs. Next up, our final pair of the video will be the dollar Swiss. Here on the dollar Swiss, we have a market that is in an uptrend, making new higher highs and higher lows, and has now pulled back to a previous major level of structure support and resistance. So around the 0.9873 area is a great level to look for long opportunities here on this pair. As you can see, we have our wick here showing us some buying pressure out of this zone, and meaning that the market could possibly see some support out of this area. Now we have already pushed up a couple of times from this zone, so we'll be keeping an eye here to see if we get some kind of other entry reason out of the 0.9873 zone. If we push below that, our next level of support will be the 0.9740 area. And these levels are levels that we've discussed not only in last Monday's weekly market prediction video, but also for the last couple of weeks. So as you can see, staying ahead of the market and staying prepared by pointing out these levels of structure can be very beneficial to a trading plan and to a trading strategy. Now, since the market has broken below the 0.9957 zone, we're going to go ahead and change this line to red. This is a possible level of resistance. Now, what we do have to consider is the fact that this market's in a pretty strong uptrend recently. So because of that, this level of resistance, although it is resistance and a possible place for a counter trend shorting opportunity, we're also going against the underlying trend of the market if we decide to take a short trade from this area. So what that means is we better have a pretty good entry reason on a lower time frame in order to take that as a short trade. But nonetheless, that is our first level of resistance, looking around the 0.9957 area, and above that, if the market pushes higher, we're going to be looking around the 1.0089 area as our next level of resistance, and once more at the 1.0167 zone. Those are our levels of support and resistance here for the dollar Swiss. And that's what we're paying attention to on the top 5 major pairs for this week. Thank you, traders, for watching until the end of today's video. If you did watch this video in its entirety, then that lets me know that you are very serious about educating yourself on the skill of trading. And the way I want to reward you for that is giving you guys a special offer on the EAP Training Program. The only people seeing this offer are those of you who have stayed until the end of the video, and I'm not going to let anyone else know about this offer until Thursday. So Friday is Black Friday. It's one of the biggest shopping days of the year. And as a pre-Black Friday sale for those of you who have stayed until the end of this video, I'm going to offer you guys 50% off a lifetime membership in the EAP Training Program. That means no monthly payments for that program, and the regular price for that program is $997. But if you get involved before midnight on Friday, and we're only allowing 20 traders in at this price because it's such an extreme value, then you get a lifetime membership to the EAP Training Program for only $497. This is an incredible value considering that a year in the EAP Training Program, if paid monthly, is around $700. So for less than the price of a year in the program, you're actually getting a lifetime membership, and you're not having to pay anything after that membership cost. So click the link in the description if you're interested in the discount, and I'm going to go ahead and discuss with you guys a little bit about what you'd be getting with that $497 lifetime membership. So in the EAP Training Program, we have a full training course that teaches the entry reasons and much more about how we analyze the markets. This is a full training course that works for any beginner all the way up to an advanced trader, teaching strategies, discipline, risk management, money management, and much more in this course. Along with that, we also produce weekly review videos each week discussing the trades we took based on the strategies you learn in the EAP training course and based on the email analysis that we send out each week. So in this program, you also receive 3 to 5 email analysis each week, which are trades we plan to take, and we send those out right before we place the actual trades, giving you guys an opportunity to take a look at the trade, see if it fits in with your trading plan, place it if it does, and or learn from it and better understand the way we view the market. And also included in the lifetime membership is the spreadsheet mastery course, which is normally $197. That will come with the spreadsheet that I actually use for my back forward testing and live trading, and also an entire course teaching you exactly how to create that spreadsheet so that you can customize it to your liking. Now, all of that is included in your lifetime membership for 50% off. The regular price for that is $997, but for 20 traders, you'll receive all of that for only $497, which is less than the price of a year in the EAP Training Program paid for monthly. And as I said, I'm offering it to you guys who stayed until the end of this video first because we can only allow 20 members in, and this is my way of rewarding you for being extremely serious about your trading education. So if you're interested in that offer, then just click the link in the description below. If not, that's okay too, guys. We offer plenty of free education here on YouTube that can really help you towards your path of becoming profitable. So make sure that you're subscribed here to be alerted whenever we come out with other free educational content here on YouTube. Make sure to sign up for our email address in the link in the description for other free information that we don't produce here on YouTube. And also go ahead and click that like button if today's video was useful for you. Remember guys, we're only allowing 20 traders into the program at this half off discount. So whether you are a current EAP member or if you're someone who's been considering the EAP training program, then make sure that you act quickly because these spots will run out fast. I hope to see you guys on the inside of that EAP training program. I wish you the best of luck on your future trades, and I'll talk to you guys in the next video.